Assalamualaikum warahmatullahi wabarakatuh. Today my group will be presenting on the money market, specifically bankers' acceptance, commercial paper, and T-bills. There are 5 members in our group, which is me, Nik Salaris Aizat bin Nik Muhammad Zalani, Ahmad Fawzul Khair bin Ahmad Khairi, Shazwan Alif bin Kamal, Muhammad Alif bin Abdullah, and Muhammad Muiz Arshad bin Hamiruddin. Let's begin by touching a bit on the money market. What is the money market? The money market refers to trading in very short-term debt investments, which are going to be on the tenure of maximum 1 year. At the wholesale level, it involves large volume trades between institutions and traders. At the retail level, it includes the money market mutual funds bought by individual investors and also the money market accounts opened by bank customers. The money market is characterized by a high degree of safety and relatively low rates of return. So basically, the characteristics of the money markets are they are highly liquid, they are safe, but they have low rates of return. So why is there a money market? So for banks and other institutions, it's for their liquidity management, which consists of to manage their interest rate exposure management and also their cash management. And as for the central banks, it's for the monetary policy management, which consists of controlling the interest rates, indicating monetary policy intentions, and also managing liquidity in the market. So who are the players in the money market? The players consist of central banks, which in case of Malaysia is Bank Negara Malaysia, NBFIs, non-banking financial institutions, corporations, commercial banks, individual investors, and other banking institutions. These are some of the examples of the instruments that are available in the money market, which are treasury bills, bankers' acceptance, short-term certificate of deposits, commercial papers, municipal notes, and repurchase agreements or repo. But our group will be focusing on bankers' acceptance, commercial paper, and also treasury bills. So let me pass on to my colleague.
Hello, Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Fazul Khair bin Ahmad Khairi, number matrix 259191. So today I would like to discuss about the banker's acceptance. What is banker's acceptance? It is a short-term credit investment created by a non-financial firm and it is credited by a bank to make a payment. Then bank acceptance is traded at the discount from face value in the secondary market. In addition, bank acceptance also acts as a negotiable time draft for financing imports, exports, or other transactions in goods. Then, bank acceptance also is useful when the creditworthiness of a foreign trade partner is unknown. Okay, next I would like to explain about how the BA is traded. So, firstly, the Malaysian exporter or buyer places a purchase order for goods. Then the importer asks its banks to issue a letter of credit on its behalf. The purpose of the letter of credit is to represent a commitment by the bank to back payment owed to the foreign exporter. And then the letter of credit is presented to the exporter's bank. Next, the exporter sends the goods to the importer and the shipping document to its bank. And finally, the shipping document are passed along to the importer's bank. So, I would like to explain about how the bank acceptance is created and traded. So, for your information, in the bank acceptance, it involves with 4 parties, which is importer, importer's bank, exporters, and exporter's bank. So, first and foremost, importer will make a purchase order to the exporter, and then importer will send the letter of credit application to the exporter bank, and then importer's bank send the letter of credit to the exporter bank, and then exporter bank will send letter of credit notification to the exporter. After that, the exporter ship the goods to the importer, and after the importer get the goods from the exporter, the exporter will shipping the document and time drive to the exporter bank, and exporter bank will give the shipping document and time drive accepted. Okay, next slide is I would like to explain about the right of each party in bankers acceptance. It involves with four parties, which is borrowers, dealers, investor, and accepting banks. So firstly, borrowers. It's mainly US imports and exports, and foreign banks who are trying to fund international trade without intervention of the US are active in the approval market. Next is accepting bank. Money center bank, huge seaboard banks, and large green trade areas and US branches and international banking agencies establish virtually all acceptance. Third is a dealers. The dealers act as a trader in another money market device, purchase and sell, receive, and take advantage of the difference in the amount to buy sell. Fourth is investor. The majority of 16% is held by the several creditors including national and municipal councils, mutual schemes, and insurance undertaking. Okay, next I would like to explain about the responsibility of each party in bankers' acceptance. Firstly, investor can embrace a marginally lower return on receipt than on a one-name paper such as company and deposit certificates. Issue trade paper with a loan charge or issue market paper backed by asset may be released for lender with a less than prime value. The adoption of a bank in the money center has historically been sold at lower discount rates than national bank and international banks. Over recent years, the number of larger banking stores has been reduced by about half.
Assalamualaikum warahmatullahi wabarakatuh. My name is Shazwa Ali bin Kamal, nominated number 259533. We continue with advantage of banker acceptance to all parties. There were few advantages, which are smaller companies gain access to lower rate in the money market. Bank will earn a stamping fee to offset the loss of interest income on their traditional lending activities. The exporter face little exposure to political risk or to exchange control imposed by the government. Lastly, bank guarantees payment of the note at maturity, which provide confidence to the market. Next, how does price mechanism occur in banker acceptance? A price mechanism affects both buyer and seller who negotiate price of certain product that will cause change in economic environments. An importer can use a banker acceptance to finance his purchase of goods foreign supplier. After negotiating price with the foreign exporter, the US importer create time draft and present to his bank. The bank will accept the draft and discount it and give the importer cash which he used to pay his foreign supplier. On or before the maturity date of the accepted draft, the importer must pay the bank the face amount of the acceptance. Next is the banker acceptance traded in secondary market. As we know, banker acceptance can also be traded like bond in the secondary money market. The bank and institutional investor trade banker acceptance on the secondary market before they reach maturity. The strategy is similar to that used in trading zero coupon bond. The banker acceptance is sold below face value at a discount determined by the length of time before the maturity date. Okay, next, how to assess the banker acceptance. The first one is the eligibility criteria include the requirement that the acceptance which are grow out of a trade transaction involving exporting and importing, including transaction between foreign countries. Next, have a maturity of 6 months or less. Banker acceptance that grow out of the storage of staple must be secure at the time of acceptance by warehouse receipt. The platform to access to banker acceptance through bank in Malaysia such as OCBC Bank, Afin Bank, and CIMB Bank. Banker acceptance can be used for collateral if it is an eligible banker acceptance which has certain characteristics and features. Next, instrument usage of banker acceptance. The treasury operations is a management of an enterprise holding with the ultimate goal of managing their firm liquidity and mitigating its operational and financial and reputation risk. Most of the bank devote to treasury management because of the market opportunity afforded by the recent economic environment, availability of high deal decision treasury management, professional access to industry standard. Third-party technology provide product and serviced according to the needs of smaller clients. Next, are there any official guidelines that regulating the banker acceptance and who regulate the guidelines? Bank Negara Malaysia provide guideline is to provide a uniform set of procedure, practice, condition and limitation to govern the creation and trading of banker acceptance in Malaysia. The effective date of the regulation is starting in 1 April 2014. This guideline applicable to banker acceptance denominated in Ringgit Malaysia drawn on and accepted by a bank in Malaysia. The general guideline consists in procedure for creation for banker acceptance, general condition for creating a banker acceptance and many more.
Hello and Assalamualaikum. My name is Muhammad Muiz Arshad bin Hamiduddin. My metric number is 263987. Today I will present about commercial paper instrument. What is commercial paper? Commercial paper is an unsecured and discounted from promissory notes issued to finance the short-term credit needs of the large institutional buyers. Commercial paper is usually sold at a discount from face value and generally carry lower interest repayment rate. Maturity on most commercial paper reach not more than 1 year. Purpose of creation. Commercial paper is sold to provide seasonal and working capital for corporation, to provide bridge financing until longer-term security are sold or until money is expected to be received, such as tax receipt, and to finance the purchase of other security. How the commercial paper is traded? Commercial paper can be issued in two ways. The issuer can market the security directly to a buy and hold investor such as most money market funds, or the market commercial paper is sold to a dealer who sell the paper in the market. The dealer include a large security firm and subsidiary of bank holding companies. Who are the parties that involved in commercial paper? There are two basic types of commercial paper, which are draft and note. The note is a two-party instrument whereby one person is maker that making promise to pay money to a second person which is payee. The note might be a promissory note. The draft is a three-party instrument whereby one person is drawer will direct to a second drawee to pay money to the third payee. Right of each party in commercial paper. First, the maker of a promissory note is the individual who has originally promised to pay. The maker must meet this obligation with payment. The second one, the drawer of a check or draft. The bank to pay and promise to pay the amount of the instrument only upon notification of a referral by the drawee to accept the paper when properly presented for payment. The last one is the drawee of the draft or check has primarily liability to the holder and individual who has lawfully acquired possession and is entitled to payment upon acceptance of the instrument by the drawee. Risk associated with commercial paper. Risk, credit risk. The main credit risk stem from rollover risk when the issuer may not be able to sell new paper to pay for maturity paper, either because the market has changed or the credit rating of the issuer has been downgraded. The second one is a liquidity risk. Another potential risk of commercial paper, although less relevant than with other longer-term debt instrument, is the of liquidity. Liquidity is generally refer to the ability of a security to be converted into cash at a price that reflect the its fair value. This is to say liquidity reflect how easily a security can be bought or sold in the market.
Today I would like to talk about the rewards or benefits of the commercial paper. First is low risk of default. The companies that issue the commercial paper are large, creditworthy corporations, and the paper often gets a rating from the rating agency. Second is allow for the portfolio diversification for investor. Debt security like a commercial paper are effective way for investors to diversify their portfolio and offset high-risk investment like a stock. Third is affordable short-term capital for companies. For companies, commercial paper serve as an affordable and quick way to get the cash they need for operating expenses and other short-term expenses. Next is pricing mechanism for commercial paper. First is the Federal Reserve Board posts the current rates being paid by commercial paper on its website. Second is the data used for the publication are taken from the Depository Trust and Clearing Corporation DTCC, and the rates are calculated based on the estimate relationship between the coupon rates of new issues and their maturities. And the last is figure of each outstanding commercial paper issue are also available at the close of business every Wednesday and on the last business day of every month. Next is how the commercial paper is traded. First, the issuer can market the security directly to a buy and hold investors such as most money market funds. Next, alternatively, it can sell the paper to a dealer who then sells the paper in the market. Then, the dealer market for the commercial paper involve large security firms and subsidiaries of bank holding companies. Next is direct issuers of commercial paper usually are the financial companies that have frequent and sizable borrowing needs and find it more economical to sell paper without the use of an intermediary. Next is how and where you can have access this instrument. Commercial paper is a common form of unsecured short-term debt issued by a corporation. Commercial paper is a typical issue for the financial of payroll, account payable, inventories, and meeting other short-term liability. It is typical issued by large banks or corporations to discover short-term receivable and meet short-term financial obligation, such as funding for a new project. So how does the commercial paper is used? First, commercial paper is a lower cost alternative to a line of credit with a bank. Once a business becomes established and build a high credit rating, it is often cheaper to draw on a commercial paper than on a bank line of credit. Banks are often charged fees for the amount of the line of the credits that does not have a balance, because under the capital regulatory regimes set out by the Basel Accords, banks must anticipate the such unsecured lines of credit will be drawn upon if a company gets into financial distress. Next is for commercial paper. 1999, commercial paper introduced as a money market instruments non-banking companies, which is acceptance of deposit through commercial paper direction 1999. January 1990, commercial paper formally introduced in the market, and June 30, 2001, FIMDA operational guidelines for 2070, Reserve Banking Commercial Paper Direction 2070, FIMDA operational guidelines, and last is March 31, 2020, FIMDA operational guidelines effective from 1 April.
And now is about Malaysia Treasury Bills, MTB. MTB is a short-term security with maturity of 3 months, 6 months and 1 year that issued by the Government of Malaysia. MTB are sold at discount through competitive auction, which is facilitated by Bank Negara Malaysia (BNM). MTB are issued by weekly basis and the auction will be held one day before the issue date. The successful bidders will be determined according to the most competitive yield offer. MTB are tradable on yield basis discounted rate based on bands of remaining tenor. The standard trading amount is RM5 millions and it is actively traded in the secondary market. Purpose of correction. The mean of the issue of treasury bill are to act as an instrument for fiscal management and fiscal policy implementation for setting a short reference rate on the future market. Government use the money to fund its debt and pay ongoing expenses such as salary and military equipment. Easy to bring investor into a safe investment where there is a low risk in the T-bills. This is because the T-bills is issued by the government. How is it created? Before you buy a bill, you have to decide whether to make a competitive or non-competitive bid. Non-competitive bidding is the simplest way to purchase a treasury bill and is what most people do who are not experts in security trading. When you make a non-competitive bid, you agree to accept whatever interest rate is decided at the auction. You are guaranteed that your bid will be accepted, that you will get the full amount of your bill paid back to you. In competitive bidding, on the other hand, you specify the return you want to receive. This kind of bidding is usually done by corporations and people who really understand the supply and demand of the security market. Is it more complicated because you don't know whether your bid will be accepted? If the interest rate of interest you specify is less than or equal to the rate set by the auction, your bid will be accepted and you will receive the uniform rate.
Let us continue on the topic of T-bills. I'll be presenting on the parties involved, their responsibilities, and also their rights. While the parties that are involved in T-bills are the government, Bank Negara Malaysia, and also the investors. The government's responsibility is the principal money represented by the T-bills are to be payable by the government. As for Bank Negara Malaysia, they issue the T-bills on behalf of the government, and the proceeds of the T-bills are to be paid to the consolidated fund. As for the investors, their responsibility is to pay the amount stated on the T-bill. And just for a quick information, the laws that govern the Treasury bills are Act 188, Treasury Bills Local Act 1946. And let us move on to their rights. The rights of each parties are, as for the government, they have the right to amend Schedule A, which is statutory acknowledgement receipt, or Schedule B, which is statutory monthly statement. As for Bank Negara Malaysia, they have the right to request, inspect, and make copies of information needed. And as for the investors, their right is to be paid on schedule or when due. These rights can be seen in Act 188, Treasury Bills Local Act 1946.
Okay, I will continue with risk to each party in treasury bill. The first one is risk to each party as investors are given at auction favorable or non-competitive bidding opportunities. The Treasury has defined sum of funds to be lent and determines the number of T-bill bids it is set for the maturity. The investors that choose to ensure their deals are approved may allow use of non-competitive deal. However, non-competitive bidders are entitled to T-bills worth up to 55 million per sale. Usually, big terms may compelling deal to acquire bigger number. for the T-bills return is they compensate the amount with reasonable deals at the lowest level. The benefit to each party in Treasury bill. They issue on weekly basis and the auction will be held one day before the issue date. The successful bidders will be determined according to the most competitive yield offer. Normal auction day is Thursday and the result of successful bidders will be announced one day after. It's tradable on yield basis at discount rate based on bonds of remaining tenor. For the pricing mechanism in Treasury bill sell at discount price through competitive auction which is facilitated by Central Bank of Malaysia. Successful bidders will be determined according to the most competitive yield tenders. Every submitted bid states the lowest rate of discount margin that the bidder or investor is willing to accept. In a competitive bidding auction, investors buy T-bills at a specific discount that they're willing to accept.
Alright, my friends. So next, I would like to explain about how T-bill is traded. Usually, Bank Negara Malaysia sell the T-bill via competitive auction. The T-bills are issued on a weekly basis, and auction will be held one day before the issue date. Then the successful bidders are determined based on their competitive yield offered. Mostly, the trading amount is RM 5 million. Next is there any secondary market for T-bills? Yes, it is actively in the secondary market. And then where you can access and buy T-bills. So you can buy at your brokerage or local banks in Malaysia, such as like M-Bank, Maybank, and many more.
Okay, next is how does the treasury bills is used. First is as monetary policy instruments. Government issue the treasury bill through their central bank. Investor purchase the bills from commercial bank or broker when the BNM sell it, and fund deposit into the bank are used by financial institutions to lend to companies and individuals boosting economic activity. Next is who are the regulatory agency. Malaysia Treasury Bills (MTB) are short-term security issued by BNM on behalf of the government. Treasury bills are used for working capital.